Hello, everyone. I'm your host, Andrea Giraldo. Welcome to Meetings of the Minds, brought to you by the New York City Hispanic Chamber of Commerce in partnership with BronxNet. This show was created in direct response to the COVID-19 pandemic as a way to highlight the work of our members and partners, as well as to understand the resources they have to help our community in those difficult times. Today, we'll be diving into a special roundtable discussion on real estate, hosted by the New York City Hispanic Chamber of Commerce Real Estate Chair, Greg Tsougranis. Take it away, Greg.
Hello, this here is Gregory Tsougranis. I'm the Real Estate Chair for the New York City Hispanic Chamber of Commerce. I want to thank Nick Lugo, Cindy, and all the board members for all the good they do for our community. We have a special roundtable discussion here. We have the New York Apartment Association. We're going to talk about legislation and the state of the market with emphasis on rent-stabilized buildings. Also joining the show, we also have Matthew Engel from Langsam Management, over 11,000 units of managed units in New York City, which is amazing. So we really have some leadership here that will make an effect for positive housing in New York City. So I just want to quickly introduce, again, Kenny Burgos, former assemblyman in the Soundview section of the Bronx, and also Matt Engel from Langsam Management. Thank you for coming here today.
Thanks for having us on, Greg.
Okay, so a lot of times we've talked about different real estate issues, and in the past I've almost felt like Moses building an ark, talking about rent-stabilized buildings and a lot of the effects that legislation have had on it that basically has caused somewhat of distress in the community. I personally got a phone call the other day. Somebody asked me if I could manage buildings. I said, what are we talking about? And they said, we have 25 buildings in distress, totaling 1,200 to 1,300 apartments, predominantly in low-income communities in the Bronx and in northern Manhattan. So I don't know who I could invite really to talk about this issue more than the CEO of the New York City Apartment Association, and someone who has 75 years of family history managing buildings and just being a dominant force in quality housing. All right, so I believe we wanted to put some of the websites up for the individuals, but did you want to say anything just about the New York Apartment Association before we started?
Yeah.
And the same for Matthew.
Again, appreciate you having me on. What I'll say is, I have the honor of leading the New York Apartment Association, which is the largest trade association representing rent-stabilized property owners throughout the city of New York. We are the merger between two long-standing organizations that have existed for over 50 years. So with my experience being a former lawmaker and now coming onto this organization, the goal is to improve the housing scenario that has plagued this city for so many decades. So I appreciate you calling me an expert, but the real expert in operating that housing is sitting right next to me.
Well, you definitely have a lot to contribute. Matthew, please.
Yeah, sure. Well, it's a pleasure to be here with you today, and also to sit next to my good friend Kenny. We've had the pleasure to work together with him in the legislature, and in this role, I've served on the New York Apartment Association and its predecessor organizations for many years, trying to advocate for sensible housing policy that'll provide good quality, affordable housing for residents of the Bronx and the rest of the city, and also at the same time ensure that owners and operators who run this housing can afford to pay their bills. So my organization, Langsam Property Services, has been around since 1949 in the Bronx, and as you mentioned, we run about 10 or 11,000 units throughout the city of New York, and we're just trying to get by in the current environment.
Okay, so I actually asked the crew to put up the website for the New York Apartment Association to take a quick glance at it. Anyone at home that wants to do their own, anyone that wants to do their own research, you could basically see that you could log on into membership organization, and they do also have these clips that take advantage of social media. Now, social media is a very powerful tool. So what we've designed here today is we're basically going to show as many clips as we can to introduce the topics that need to be discussed, and just get feedback from the experts that we have here today. So I'd like to put the first clip on. It's one of the YouTube clips. It's called Master Plumbers. All right, so BronxNet, please do throw that clip on. I'd love to show it. Okay. Okay, so I was hoping there'd be some voice. Is there any voice attached to it?
But now the city council's bill will require a master plumber to do this.
Okay,
and
so
here's the kicker. In a
basically,
city of nearly
one of the
4 million
one
homes,
of the
there's
issues
only
about
about 1,000
affordability
master
is that the high expense it takes in order to run a building. Okay, and one of the recent issues that I believe was passed, and you could tell us if it definitely was passed, is that now they want to have master plumbers, which is the highest level of plumbing certification and the highest paying, and also the least amount. There's like 1,000 master plumbers here in New York City. So now every time a landlord, and I'm also curious whether an individual who has a 1, 2, 3 family house, where does this stop? What is the limit? If they need to do a simple procedure of taking the stove in and out, they would have to hire a master plumber. All right, so you have a very good video here. You talk about it. People can see it by themselves also. But do you want to give us any input? Because I personally think that there's so many things that sound good, but to have a master plumber come and change a stove is basically having, I don't know, an astrophysicist come and, I don't know, do basic math.
Right.
So what's your input on it? And did it pass? Who was responsible to have this? And basically educate us on what's going on with master plumbers in our houses and buildings.
I appreciate you highlighting one of the many videos we create. We try to use these mediums to educate the public on what's happening in housing in New York City. It can be a complicated and complex subject, but this is a perfect example of what we describe as unfunded mandates. What we mean by this, the city council passes these laws. It hasn't become law yet, it's passed city council, but we do believe it will become a law very soon. And what this requires is what you stated. There's 1,200 master plumbers throughout the city of New York, and this bill will require any sort of gas hookup. So this is not a repiping of gas lines. It's not a changing of gas lines. This is as simple as unplugging and removing and swapping out a stove or a dryer or any other gas appliance. And it's going to add an exorbitant cost to have these procedures, and that translates directly into higher rent. And this is the conversation that I try to engage in. This is sort of the points that we try to make, that all of these mandates, while the city council is not passing any companion funding to make this happen, what that's going to now show up as is a higher cost to operate housing, which is going to translate to higher rents. And this is what we're trying to push back on. New York City is one of the most expensive cities in the entire world. The rent continually seems to go up. And bills like this one do nothing to help that affordability goal.
But there's another aspect to that. If you have a rent-stabilized buildings, you can't raise the rents. So now you're putting distress on the property owner. Matt, what's your feedback? You once told me 25% of the rent-stabilized buildings in low-income neighborhoods are in foreclosure, about to go into foreclosure. Is that the correct number? I mean, you're kind of like an expert on all this.
I mean, it's taken a stab at a number, so I don't want to, pin on a specific number, and who knows, by the time this, this airs, maybe that number grows. So, but we are definitely headed towards something where I have said and suggested that every rent-regulated building in the Bronx, if they are not currently headed towards financial ruin, will be there shortly. So, and I feel very comfortable saying that. Unfortunately, it's a scary thought. The stove installations by master plumber is just one in a litany of other unfunded mandates that get passed on by the city council. And it's not just financial. It's a resident needs a new stove, and how long is it going to take to get one of these 1,000 companies in the entire city of New York to get out there to do this? Right now you even have big wholesale companies, Costco, PC Richards, all these, they're all going to have to change the way things are operating. Where we might have been able to have a stove repair company come in, see if they need to do it, and if not, they bring a stove, swap it out, put a new one in, so the resident can be cooking that evening.
Or at the very least, if they are concerned about safety, why not have a certificate where, a master plumber who's at the highest level of plumbing can, basically, like, what about that person who doesn't have a master plumber degree? Yeah. Let him make a living also, basically have certificates out there in order to have something.
Well, the reality is even supers have been doing this kind of work for decades and have done it safely. And this is an overreaction to gas explosions that we've certainly seen, but have never been caused by an appliance hookup. They've mostly been to illegal gas lines, faulty hook, like things of that nature, which we always have to regulate for safety. But there's always a balance between safety and regulation, and this doesn't really strike that balance.
Superintendents have the ability to operate a boiler for a 50-unit apartment building, but they can't hook up a stove.
Right. So it's one of the idiosyncrasies that we're dealing with, and I just think that it sounds good, but it's definitely affecting housing, the ability to provide affordable housing. So let's go on to the next one. The next video that I loved is called Hot Potato. Could we play the video of Hot Potato? Yeah, put the sound on for me, please, because this is something that's almost unbelievable.
Going on in Harlem with this building. The owner of this building
Okay,
can't
is the
pay the
public able
mortgage.
to
The
hear the
rents don't
sound on
cover
it?
the cost to operate, so they stopped paying. And the bank started a foreclosure.
Okay, so
That's when the owner
basically
said,
what's going
"Take
on
it,"
here
and the bank
is
said,
you have a
"Whoa, we
situation
don't
where
want it. The building
there
is
are
losing
buildings
money,
that are
and
rent
there's no way to
stabilized,
fix
which
it."
basically means
so
that the
now,
rent's a cap.
they're literally suing each other over who
And,
gets stuck with the building.
the
What's even
expenses have gone
crazier,
through the
this is
roof,
second bank dealing with this problem.
and the
first
building
one
has
collapsed
become
because it owned this
not an
building
asset,
and
but a
many others like it.
liability.
How many other buildings?
And
Thousands.
there are buildings where, I would have thought as a kid, I own a 40-unit building. Or you save up and you have a 40, 50, 60-unit building, that is your retirement. And all of a sudden you find out that your expenses are going through the roof, your insurance is going through the water is going through the roof, which you deal with on a daily basis. And all of a sudden now it's worth nothing, and it's a liability. And it's gotten to the point where you have buildings in New York City, based on the education that you have in the clip, that the building owner doesn't want it, and the bank doesn't want it. I don't know how that's going to be quality, end up with anyone having quality housing. So what's your input on that? Can someone educate on what's going on with the fact that these things that were once the backbone of intergenerational wealth or financial security are now a liability?
Well, we can take it from the first point that Matt made, right? Where right now, if you have a mostly regulated building, you are either underwater or on track to be underwater. Not a question of if, but when. And what we're seeing in examples like this video from this building in Harlem is that these buildings are unable to make basic repairs, and they get to a point where they can't even make their loan payments. But the reality is banks are not in the business of running housing. So in this specific scenario, the bank did not want the keys to the building despite the owner not paying the mortgage and defaulting on the loan. And now they're in a lawsuit battle to decide basically who will own this property, because the owners don't want to continue to operate it. It's losing money. And the bank doesn't want it because all they want to do is get repaid on their loan. They're not in the business again of running housing. And this is a scenario that we're seeing more and more of. And banks are playing the extend and pretend game that we call it, where they're trying their best to make these deals sort of work out and fix the financial model where owners are able to make some payments here. But we're reaching a point where it's such a catastrophic level. The question remains, who is going to run this housing?
So that leads us to, let's go over the numbers. I don't think anybody knows the numbers better than you, Matt, when we have conversations. All right, so let's just take a little bit of the video, and again, I assume that the public's able to see the clip. And all these clips can be found on the website. Operating expenses. Let's go over the numbers.
Today we're in the Bronx, and we're going to go through what it costs to run an apartment. Let's go. First off, $278 of every rent check goes to taxes. Maintenance is about $215.
Yeah, we can't hear it if you could.
Then about $150
I'd love
goes
to hear it, to be
insurance.
honest with you.
Water and sewer
Good thing I have
payments are about
captions.
$95. Fuel payments, $125.
I believe the
Labor,
public can hear it,
administration,
though.
Yeah,
other costs
it
add up
should
to about $337.
There we go.
We're at about $1,200 now, and we haven't even paid the mortgage on the building. This apartment we're standing in has a regulated rent of close to $800. The previous tenant lived here nearly 40 years. But for the past 2 decades, the rent has just not covered the operating costs. Now it needs $100,000 of renovation costs to remove lead-based paint, update wiring and plumbing, level and finish the floors, upgrade appliances, and all of that is required on turnover. This is why apartments like this sit empty for years. We need a way to bring these apartments back online.
I'm going right. All right.
It costs $1,200 to run an apartment. And if you have a rent-stabilized rent of $800, the landlord's losing $400. And then on this side, you have a rent-controlled apartment, which could be even less because the rent-controlled numbers are usually less. A lot of these landlords, we look at them and we might say they're the boogeyman, but in actuality, they are providing much-needed housing. And this is mostly in low-income areas. So you know what? We're kind of sounding the alarm again. Is this true?
Yeah, Greg. I mean, look, we're sitting here in the Bronx today, cutting the show, and while in some areas of the city you may have buildings that have rent-regulated apartments, and they also have deregulated apartments, which are subsidizing unfairly the rest of the units. But when you're walking around the Bronx, most of these buildings have 0 deregulated units, and so the average rent in the entire building is under $1,100 or $1,200. So we're not talking about one apartment that Kenny's referencing where it's actually below the cost of operating it. We're talking about entire buildings where every single unit is under it, where this building could be losing a significant amount of money. So the owner, how long are they going to stand there and just continue to put more money, in bad money after good, where they can't survive?
They're not in the business to lose money, and you know what I believe the effect is going to be is they're going to do as much repair work as they can, patchwork, no major improvements. Yeah. All right, and that's another thing is that from the 2019 rent laws, there were changes that were made that really affected our market. And one of them were the internal, the MCIs, the major capital improvements, and the internal capital improvements. All right, so I want to show the next video because that also deals with what happens when you have to make investments into an apartment that needs $50, $60, $80, $100,000 worth of repairs to bring up to code. Because now the other thing is that lead paint has to be, there's all of the criteria that are involved in bringing things up to code have just really become much more stringent. So it's almost like a perfect storm, and there's more perfect storms coming. All right, but you want to talk about the fact that, in fact, let's see the video, and then we'll move on to, let's talk about the MCIs and the internal improvements.
It's like a crime scene in here. So we're here in the East Village at one of the buildings that have one of the thousands of empty apartments throughout New York City because of the 2019 rent laws. How long has the apartment been vacant? 2 years? It's a bit of a fixer-upper, but the problem here is that the property owner would have to put tens of thousands of dollars just to get this apartment back online. And the law says after putting tens of thousands of dollars, the rent essentially stays the same from the previous tenant who lived here for decades, which will render the property owner and the bank to lose money for the next 30 some odd years. So welcome to the bathroom. As you can see, most of these buildings are decades old, and they require just so much work for anyone to even want to live in here. The laws don't allow the property owners to make sure that they get a return on their investment, so these apartments just live offline for the foreseeable future. A rent-stabilized apartment is controlled by the government on both ends of the operations. It controls the costs like property taxes and water and sewer and insurance, and it also controls the revenue because the Rent Guidelines Board decides how much the rents are adjusted each year, and that's why you get all these apartments and buildings falling into disrepair and falling off the market for the foreseeable future in the middle of a housing crisis. Even the rats don't want to live here.
Okay, so we saw an apartment. The landlord was trying to get this back, but now why would he spend $50,000 or $100,000 to fix up an apartment? And what is the math? How long will it take him to recoup his investment? And in past shows, I mentioned this, where I was told there's like between 60 and 80,000 rent-stabilized apartments, and then you have another 9 or 10,000 NYCHA apartments that are vacant because there's no funding or whatever the situation is. And we have a housing situation where people are in our shelters that are being, basically in a situation where they don't want to be in. So is it 60 or 80,000? Is that the right number? What would you estimate as to property owners who are saying, first of all, what can they recoup? Does it make sense? Does it not make sense? And how many rent-stabilized buildings do you think right now, which is the landlords are locking the key and saying, doesn't make economic sense to me?
I mean, we know what's happening. We know what's happening. I know in my own, buildings that I manage, I know they exist in, real numbers. We know lots of other people through the organization that are in the same situation, and we have to assume that is the case across the city. When you're facing a situation where the building has no money and you're just doing what you can to operate and you need $100,000 to put into a unit, you can't even finance it or borrow the money to do it because it doesn't make any financial sense to do it. So nobody's going to lend you that money. As you said, you'll put in $50,000, $100,000 and you're only capped at what you can get back, and it's going to take 15 years to just get that back. So it's even longer. So
what are the numbers? What are they giving you? And I also hear it's a lot of paperwork involved, right?
Mm-hmm. Yeah, basically, there are caps for what you can get back. The cap is now $30,000 on what you can put into an apartment. Depending on the situation, you can go a little bit higher. And the payback on it essentially, figure it's ballpark, 15 years or so. It ends up being about a 7 or 8% return on your money.
So they're basically saying that you have to fix up the apartment at your own expense. And the landlords are not going to do it because it doesn't make economic sense. They're not and probably they can't afford it either.
And that's just taking into account the renovation costs, right? Like the video illustrates, there's an ongoing operating expense related to the cost of property taxes, insurance, water, labor, maintenance, and that cost can be exorbitant. It averages around $1,200. So you have all these apartments, typically that are of the lowest rent, that stay offline because it doesn't make economic sense to renovate and bring it back online, and then it certainly doesn't make sense to have it rented out below the cost to operate. This is just perpetual loss of money, which is why we're seeing so many vacancies happen. You asked the question of how many vacancies are there, right? We estimate at a very minimum it's 50,000 units, and we know this because One, within our organization, we help our owners with registration, so we can take a pretty good sample size and scale it out from there. But on top of that, we can take a look at the city's own pension data. The city invested the pension money into rent-stabilized portfolio after Hurricane Sandy, and their own portfolio had a 13% vacancy rate of the units because it made no economic sense for the city to invest in those apartments and bring them back online. So it's illustrated right there.
I actually saw that video, and we're going to play it.
Did I get ahead of ourselves here?
A little bit. But, basically, there is a collateral effect. There's a collateral effect that if people are investing in pension funds that buy rent-stabilized buildings, and those pension funds are losing money because of legislation that people are passing, predominantly the 2019 rent laws, guess what? Our teachers, our cops, just this one fund that we're going to bring up, they lost $127 million. This is nothing lives in a vacuum by itself in our society. We're interconnected.
Yep.
All right. So
and that doesn't even touch on 50% of buildings.
Okay.
That
So
are
why
owned
don't
by
we
small
show
owners.
why don't we show the one that that actually you mentioned? But no. Let's so housing policy that costs teachers and cops. Let's go on to that one.
Picture this. You're a retired teacher and your pension fund invests in affordable housing, and a decade later, over half your money is gone. That's what happened here in New York City. After Hurricane Sandy, 2 city pension funds spent $500 million of retirement money for teachers, cops, firefighters, and other city workers to buy rent-stabilized buildings. The goal? To keep housing affordable and grow the retirement savings. At first, it worked. Then Albany passed the 2019 rent laws, and the value for these buildings collapsed overnight. The Sandy Fund ended up losing more than $127 million. This is the definition of shooting yourself in the foot. The pension fund didn't speculate. These buildings were intentionally defunded with no consideration for the consequences. Pensioners are not the only ones who lost here. Older buildings across the city are in financial distress and deteriorating. Housing policy doesn't happen in a vacuum. It affects us all. Okay, let's try this again.
Okay, so I think we kind of talked about this beforehand, but we don't live in a vacuum. We are all interconnected. And real estate is passive income in many ways. And people who buy into a pension fund, that's someone's retirement. Much like the small property owner buys a building and he thinks this is what he's going to be living off when he's an old man or old woman. All right, but now let's go on to the next video because there's more collateral damage that people don't understand. All right, if you live in a building that's half rent stabilized, half rent controlled, then what's the landlord going to do? How is he going to survive? And what effect does it have on the units in the building that are not rent stabilized? So let's actually go on. We have an election coming up. Right, the one that talks about Mondani housing, Mondani's building. This is actually, we have a mayor who lives in a rent stabilized building. So let's see the video that you guys produced on that front.
We'll have to go beyond the market. We can establish community land trusts to gradually buy up housing on the private market and convert it to community ownership. We can give tenants a right of first refusal to buy out their landlords when buildings go up for sale. And we can fully commit to a new era of social housing, ending subsidies for luxury housing development and using our wealth to build beautiful, high-quality social housing projects that offer good homes and strong communities to everyone. We won't decommodify housing overnight, but we know what we have to do, and we have history to guide us.
Okay, so basically, the future of real estate in many ways is what they call decommodifying housing. We're seeing that in the affordable housing developments. I'm involved in an affordable housing development, and basically the idea is that they would be given large tax breaks, and then they would have to fit inside of an income bracket. All right, but this is like a new term now where people are talking about decommodifying housing, which means that it won't really be an asset anymore. It'll be something that's run by government, and I think that's antecedent, or it's not how America was built. America was built. The immigrant came, he purchased a piece of land, then he might have mortgaged the land, and then he took the money, and then he built a business. So is this something that you see I mean, every idea could be healthy, but what are your thoughts on this idea that basically individuals shouldn't be owning buildings?
Yeah, I mean, that's certainly been the direction that policy is moving towards. We had this under Mayor de Blasio, and much of the chatter coming up on the mayoral election, of course, with Mamdani has been about this decommodification of housing, the idea that private ownership should not exist in housing. What we see with NYCHA, we see what happens when the government is running housing. It's year after year, the Attorney General is putting it as the worst landlord in New York City, and so I think we see what happens when government is running housing. So why we would go in that direction makes no sense to me. Plus, I'm running property for private ownership, but I'm also running it for nonprofits, and the nonprofits, have the same challenges, the same underlying cost issues when it comes to rent caps, crossing the barrier of expense growth. So regardless, either way, it doesn't seem to make sense to me.
Okay, so I only have a minute left. I wanted to show more videos and talk forever about what's going on in housing, but I think we raised the alarm bells again. Hopefully the public will be able to see, basically think twice, because there is distress, and I really think as if what's going to happen is a lot of the hedge funds are going to come and buy these buildings, and they're going to come up with some kind of a solution. So any final words, because I think we have less than a minute left.
I would just say, listen, every New Yorker is concerned and wants affordability, and that's what we want here at the New York Apartment Association, and I myself personally, but we have to have real conversations on how we get there. The fact is there's a cost to housing. The fact is the government's role is to assist New Yorkers, tenants, in that affordability, but it shouldn't come at defunding these buildings. There's a way we can make this work, and that's what our goal is.
Okay, we still have about a minute. All right, so 30 seconds. All right, so we have 30 seconds. All I really want to say is thank you. I mean, it was kind of a quick conversation. We held our flag up one last time. Okay, and I just want to say thank you for coming here today, and I hope that we could continue the dialogue, and thank you for your service in helping to get the word out and all that you do to provide quality housing. Thank you for your time.
Thanks for having us on, Greg.
Okay.
Appreciate it.
Once again, for more information, Kenny Burgos or Matthew Engel, you can email them at kburgos@housingny.org, and then Matt at Langsam Property Management. Their email should be at the bottom of the screen. All right, if you're looking for apartments, I'm sure that you guys have a rental division, you could help people out there. And Kenny, if anyone wants to join the New York Apartment Association, you have their information as well. I'm sure there's a lot of landlords out there who just want to be part of the group that's getting the word out and protecting their assets. Thank you.
All right.
Unfortunately, that is all the time we have for today. I want to thank our guests, Kenny and Matt, for joining us, and you, our viewers, for tuning in and checking us out. Keep following BronxNet TV for continued coverage. And if you're not a member of the New York City Hispanic Chamber of Commerce, you can visit us at hispanicchamber.nyc. Once again, that is hispanicchamber.nyc. You can also engage with us on LinkedIn at New York City Hispanic Chamber of Commerce, all spelled out. And I'll see you next time for another episode of Meetings of the Minds in partnership with BronxNet. See you next time. Ciao, ciao.